Okay. Now let's try to understand about the net profit margin. So simply net profit margin tells your final net income after all the expenses, whether the expenses belongs to the production or they are certain common expenses. It's like while manufacturing the Apple phone, the phone and their parts expenses are direct expense, but there are certain indirect expense like common office salaries, administration, rentals, etc. So net profit margin simply is net profit income or after all expenses, and that needs to be divided by sales because this is being earned on sales. Now let's see through our data that where it falls. So your sales is 400, your cost of goods sold is 250, then you got the gross profit of 150. Now there are certain operating expenses within the business and there is certain interest expense as well, which is of $70. So that gives you 150 minus 70, $80. Now this $80 is your net income before taxes, and let's suppose and assume there are 30% taxes, so tax is $24. And finally you can say after these taxes this $56 is being available for after all kind of expenses within the business. So this $56 is your net income and your sales is $400. So when you divide this 56 by 400, you will be getting your net profit ratio, which is here, which is 56 divided by 400. So you are getting 14% as net profit. It simply means that for every rupee of sales, every rupee of revenue here, you are getting 14%, meaning $0.14 as the net profit remaining with you. Now why would Apple company care about this net profit margin? Because this shows the overall profitability and tells after all kind of expenses how will the profit look like. And this not only covers the production cost but some operational costs just like administration, common office expenses, and so on. Also, it helps the Apple company to evaluate their operational and pricing strategies. If the net profit is going very much down or there are increasing operational expenses, it helps the company to see through that as well. It guides the management on cost controls and investment decisions as well, and signals the financial strength to investors that how the company is performing and how they are doing.